Okay, so I was going to do a video on the FOMC. We call it Fed Day announcement. Actually happened a couple days ago on Wednesday. Today's Friday. It's actually Friday evening. I'm just barely getting to this. But I got an email from a trader that uses prediction points, and I thought it would actually be better to go through his email so that you can see how other traders are trading this. Because I can talk all day long about this and it only goes so far. But if you can see how other traders are using this, then I think it would be helpful. So that's what I'm going to do. So this is the email, and I'm just going to go line by line. This shouldn't take very long. I watched your videos on staying short below certain prices and long above them. Since we never reached 3022.75, I kept watching for price to break above previous highs. Okay, let's go to charts. And I'll pause at each one of these breaks so that you can see what I'm talking about. Let me actually get rid of these. These are, when I showed charts, these are my actual charts. So that was the DOP indicator, and this is one price. And so we would just want to focus on prediction points. So again, since we never reached 3022.75, so that's this price right here. 3022.75. So since we never reached that, kept watching for price to break above previous highs. So this is very smart because we set all these highs for the night. We just sideways. This is very, very, very typical FOMC pre-announcement market movement. Go to any FOMC statement, look at the day before, and this is exactly what happens. So any one of these highs, we are looking for price to break that. It never happened. So for me, the market opens at, where is it? 7:30 right here. And we almost got there. We didn't get past any of these highs. So this was the high of the RTH. Okay, and this is very typical. And by the way, this is a massive span of like 60 points. So, and I'm just going to leave it like this. I don't want to zoom in because I want you to see the big picture of this. So for example, like this run right here, this is 10 points from this high to this high. It's actually more than that. It's about 13 or 14 points. So just to put that in perspective. So if price is going to get to a level, so up here, then we've got to break highs, and it's not happening. Okay, so that's what he's watching for. And then back to the email. Since this never happened, I decided to look for shorts. Very common sense. I got into a couple times around 3014, which was right here. So probably using one price. I think that was about where it was at. Ended up taking profit at the orange lines. Boom, boom. So we got 08 and 04. Okay, back to the email. Okay, orange lines of 08 quarter and completely out of 0475 at the FOMC announcement. So what we're talking about is right here. So by the time that the announcement came out, which this was the announcement time, he was completely out by the 0475. So about 6 points or so from the first exit and 10 points or so on the second exit. Not bad. Since that bounce up didn't break any prior highs, so let's walk through this. So was short through here, probably on some breakdowns, and got out here and here. And so here's the bounce up, right? So we drop and we bounce up. Let me move my cursor. Since that bounce up didn't break any prior highs, I knew to get short again. So look, a lot of this is just really common sense. It's just simple logic. When we're using these prices, we're simply looking for price to move from one line to the next. And let's forget about the colors blue and orange for a second. If we're going to go up, we have to break highs, right? And if we're going to go down, we have to break lows. So if we're not doing one, we're probably doing the other. Now, as you practice and you get more familiar with getting in and out of these trades, if you make a mistake and you're in the wrong side of the trade, you shouldn't be wrong for very long because it usually becomes obvious what to do next. We're either breaking highs or we're not, or we're breaking lows or we're not. Okay, back to the email. I took some out at 96 and a quarter. So he was looking at these, the blue lines. which are also called red lines. And so it took some out at 96.25, which was this price here, and then again at 92.5, which was the second one, and held one more to 29.68, which was this one all the way down here. So back to the email, since it was running so fast, okay, I missed out on the 29.59.25, which was basically the low of the day. Orange line, but that's okay because I got back in short at 29.92.5 and then again at 29.96.25. Okay, so if you watch prior videos, what's happening here is he's doing exactly what I've laid out. So if we break through a potential support area, which is what happened here, you can kind of see it tested at the 96.25. In fact, since we're on this time frame, let me just make this bigger. So you can see how it tested this just briefly. This is a 1 minute chart. So we sat on this price for 3 minutes is all. And yes, it did bounce 5 points. It doesn't look like 5 points, but it did bounce that much. So I know that a lot of you probably that are using these prices probably tested that. When we break through an area that we test, we've got to reverse, get out of that position and go the other direction, especially if you're going to trade markets like this where it's moving fast. If you don't have a lot of experience with fast moving markets, then just stay out and learn. Okay, don't learn by losing money. Stay out and watch so that you can know what to do. Okay, so back to the email. So got in again at 96.25. So we just saw that. Because your videos talk about price coming back to retest these prices as the opposite. Okay, so back to charts. Okay, so when price approaches one of these levels and it either has success or failure, it doesn't matter. If it breaks through like this and we come back to it, the probability of it acting as the opposite, so in other words, in this case, it would be resistance, is extremely high. And so as traders, what we need to do is look at probability. What is the likelihood of something happening? And in this case, that something happening is price reacting to this area as resistance. And so we trade that, we put on risk. We get into the market and we put on that risk. This ran for 7.5 points, this first drop here. And then we made it to the 96.25 and it runs even more, 11.25 points to this line here. Obviously it went more than that, but just to the first target was 11.25 points. So we haven't even talked about going long on any of these prices here. I'm just going through this email. So back to the email, all in all, I pulled around 10 points on that trade, which put me over 50 points for the day. Not bad on 15 contracts. So those of you that like to do the math, 50 points, so I don't know if it was 51 or 53 points, whatever that is. On the ES, it's $50 per point, and then you times that by 15, the number of contracts. He was trading 15 contracts. By the way, my wife is really happy. That's good to hear. Thanks for putting all those together. These price levels we trade are unbelievable. I agree, Alex. Okay, so basically, this is really a lot of what I would have gone over had I not received this email, is just kind of going through, walking through a market like this. And we have a really massive amount of movement in respect to what I would call normal days. The market's, nothing crazy is happening. Trump didn't announce anything, or, we don't have an interest rate announcement, or, things like that. Those are market moving events. And then of course things like war threats and anything that impacts oil, those types of things, and of course the list goes on, are things that really move the market. But we don't have that every single day. But with these price levels, the game is still the same. What we have to do is we have to widen everything out. And so what we do is, instead of typical profits, we need to open up to grab more of what the market's going to give us. Okay, it doesn't make any sense if you're used to trading with taking a couple points out of the market. If the market's going to move 10, 20, in this case 60 points, it's not about greed, it's about taking advantage of the movement. And so as you can see here, what happens is we do the same thing, whether we have a big movement type of day like this, or if we have smaller movement. So we get in at these prices and then we target the next price. If price is not breaking higher highs, it's probably going to go down. So then we go in that direction. If we're not breaking lower lows, then we're probably going to go up. And so if we just keep those simple things in mind, then it really doesn't matter what the market's doing. We just need to position ourselves accordingly, get in where we're supposed to get in, take profit where we're supposed to take profit, and then watch for situations like this, as Alex described, where we broke through this key level and we came back up to test it. Now it's time to get short. So anyway, that's a wrap for this. I wanted to specifically cover the FOMC announcement, because if you go back to any FOMC announcement and you look at prediction points for that day, it is very tradable. So I hope that helps, and we'll continue this series in the next video.